Hello ICT traders, welcome back to the channel. In today's video, I'll be reiterating on the subject of market structure shift as taught in the ICT concept. So lately, I've gotten so many questions asking me to make a video concerning this subject matter. Even though I've made videos explaining what is market structure shift as taught in the ICT concept, it is still important that I reiterate on that subject matter. So even if you know what exactly is market structure shift, if you watch this video to the end, you will still gain something new that you don't know about market structure shift. So the first thing first, for you to properly understand what is market structure shift, you have to understand the three components of market direction. In the ICT concept, we have these three components of market direction. We have the uptrend, we have the downtrend, and we have the sideways market, or what is called the consolidation. So these three components of market direction occurs because of liquidity that is in the market. All right. So market structure shift in essence simply means a shift in direction, either from an upward direction or from a downward direction. If market shift from an upward direction to a downward direction, you have a market structure shift. So with that, you can simply call market structure shift as market directional shift. So let me show you a practical example of that right here on this sketch, and then I'll go to my chart and then show you how to identify market structure shift. And for you to perfectly get your market structure shift, you must work within a certain time frame. Time frame is what differentiates every single market structure from another. So if you're looking at this market structure from 4-hour time frame, it must be within that 4-hour time frame, because a market structure shift from a 4-hour time frame might not be a market structure shift in that particular time frame. So look at this. If you see your price action in this manner, normally when you see price push from here to here and then retraces into this place, what do you think is residing right above here, this particular place? What is here is what we call liquidity. So liquidity in simple term is called money. So here is money. All right, at this point is where money is. So if you see price push above it to break this structure, it is because price is reaching out for money. And then right here, what do you think is below here? It is still money. All right. So money here has been taken. Money here is residing because liquidity resides above either equal highs, equal lows, or relative equal highs and lows. So with this now, if you see price action like this, for instance, I'm just digressing from the main topic. If you see price move up like this and come back to this area, what do you think is left above this particular level? It is money, in simple term, liquidity. All right. So if price comes back again and reach this level, come back again without picking this money, what do you think is left again around that area? It is still money. All right. So when you see relative equal highs or relative equal lows, this one has more money than this. And that is why when you see relative equal highs or relative equal lows, price comes back and pick all the money around there, which we call a fake breakout. But that is not our subject matter. I'm just trying to show you how liquidity, market structure shift, or break of structure, all these terms come in handy. So right here, the money has been taken, price comes back to this area, and then we have another movement from here to here. This is money. All right. And then likewise, money accumulated right here. So as price is picking up all the money that is above here, all right, as price move up, come down, it leaves all the money below here. So the reason why this price is moving in this direction so far is because there is more money above here, more money above here, more money above here. All right. So as price is moving, it is picking all the money above here, and then it is leaving the money here, and then the money here. All right. So as this movement reaches a certain level, it picks the last money that it is reaching out for, which is liquidity. It now changes direction, and then look at it. It changes direction because it picks the last money and then picks this first one. All right, it starts counting now. It will reach out to the last level again. So this, please look at this. After picking this one is a break of structure, or what we call a liquidity grab. Until when we see price crash into this place, this remains a break of structure. You have to understand this because you're practically watching this happening. You don't know that price will crash into this. All you know is that price is breaking structure, and then it crashed into this area. It took out the last low here. Once you see price takes out the first money that is here in the downward direction, coming to the downward direction now, you know that price is changing direction, and that is what we call market structure shift or market directional shift. And then look at this. Price will now begin to hunt all the money here as it pushes. It picks more money here, both in this area and then the ones that are here. Right here, you see money. Right here, you see money. Right here, you see money. And then look at this. It is picking both the liquidity here and here. And then what do you have left here above these places? This is money again. All right. This is money again. And then this is money again. So when you see price decides to change direction again from here, and then it crashes from here up to that side, coming back and then having this movement again, you have another new shift in market structure. Other people call it change of character, but ICT calls it market structure shift or market directional shift. So all this movement happens time and again, and even when you see market consolidates, it is trying to find a particular direction. All right, so this is all about market structure shift. I hope this is explanatory enough. If I go to my chart, you're going to see it in practicality. So money, picking money, and now this one is going to target all the money left above here and then pick both the ones that will be from above here, right here. Okay, it will pick both the money left above that place and these ones. All right, so let me go to my chart and then show you that. So look at this price action. Look at this movement from here to here and then to that side. You are going to see break of structure in these areas. This is break of structure right at this point. Let me just mark it as break of structure. All right, and then going down to the next area, break of structure at this point, just to make it more clear so you can see. Another break of structure right here. Let's see it right here. All this one, this relative equal lows is where the break of structure happened. And then right here too, break of structure. I consider this as a retracement. And let's see this. If I use this place or either one, from here you can see these lows are relatively equal. They are not exactly equal, but they are almost relatively equal. So this is a break of structure. So as we keep going down, we have break of structures. All right, where is the break of structure? No break of structure here, but here there is a break of structure right at this point. Let me make it more visible and clearer for you guys so you can see. This is a break of structure. Now look at this. As price was moving, picking liquidity at this point, let me see if I can get this right here. All right, so you have this liquidity here. Price picks it from this movement. You have another one right here. Price picks it from that movement. You have another one here. Price picks it from that movement. You have another liquidity here. Price picks it from that movement. It keeps hunting the liquidity below these places, and then I don't know what happened. Maybe price so that there is no more liquidity around that area. So look at this. You can see it is picking both the liquidity from this downward movement and the ones left below here. And you can see it reaches this level where there is no more liquidity, and then it changes the movement. You can see both the side have liquidity. Below here is liquidity, below here is liquidity, below here is liquidity, in essence money. Below this relative equal low is liquidity, and then below this place. So as price was moving, it reaches a certain level where the liquidity has completely been swept out, and then it now changes direction to look for the liquidity that was left above here, and then it will pick it as it goes up, but on that direction. So that is what market does. You see this right here. Let's say liquidity here, liquidity here, liquidity right here, liquidity right above here, liquidity right above here, liquidity right above here, and then liquidity right above here, right there. So this market structure came in right from here. You can see this last liquidity, price decided to swipe it. So market structure shift mostly happens on two different occasions. All right, it can decide to pick liquidity here and then pick the opposite liquidity also, but you want to see that the candlestick closes above the high, lower high. In this case, this is a lower high. Since we are dealing with change of direction from a downward to an upward, this is a lower high, price closes above it. So you can see this candlestick, it closed above here. So it will begin to hunt the liquidity. If it retraces, it will hunt the liquidity that was formed here. Now once you see this high formed, as you see this retracement coming, money is left here, it will price and then come up and grab this one and this one, both these ones. So it is grabbing on both sides. I hope you're getting this. It is grabbing on both sides. So that is why price moves in that direction. So we change from a downward direction to an upward direction. This is a market directional shift. You can change it to MDS, market directional shift, or market structure shift, whichever way you want to call it, as far as you understand it. So you can see this one, it picks liquidity on both sides, down here and upward. Let me show you that. There is a kind of one that happens that price doesn't necessarily picks the liquidity down here. It just does something like this. It comes and never even reach that level. This is still considered as a market structure shift right here. All right, this doesn't happen oftentimes. This is still considered as market structure shift. This one, you can see that price actually came like this. It did something like this, came like this, grabbed the liquidity on this downside and then upside on two sides. We have this right here, liquidity, and then right here, liquidity. But this one, it never reached this area. Liquidity was here, price never reached that place, and then it turned direction. All this one is institutional swing points where price decides to just change direction without necessarily doing anything. This one is also a market directional shift. You see this one, as price reached this place, it just changed direction from here. All right, because this one you can see, and then it came back. This one too is considered as a break of structure, this small outward movement. So from here, price decided to also change another direction here. This one is another market structure shift. So you're going to watch this, just practice it on your chart. I think this is explanatory enough why this is happening, both liquidity, taking in liquidity concept, and then understanding how to bring in this market structure shift. As soon as price picks up all the liquidity, it just changes direction. If you can scroll across, you're going to see that this liquidity reached this place because of all this liquidity. All right, this price action rather reaches this place because of all this liquidity, the money around the chart. And then once it picks all the money, it changes direction. So guys, this is all about this video. If you have any question, let me know in the comment. I will answer you. I don't want to take so long explaining this concept. Don't forget, market structure shift happens when market changes direction from an upward movement to a downward movement. Like this one, price came to this area, and then once we saw it take out the last lower high, since we are dealing with a downward movement, and that lower high must be taken out by the body of the candle. Once you see it close above here, you have a market structure shift, and this does not mean it happened in the daily time frame. This is only in the 4-hour time frame. All right, thank you guys for watching. See you in my next video.